Good morning, traders and investors. It's Wednesday. It's August 16. Where is the summer going? It is so hot here in Ponte Vedra. It's amazing. My wife has to go running now at 5:30 or 6 in the morning or it gets too hot. My name is Roger Scott and welcome to my morning preview. Before we get started, take a minute. Make sure to like our channel, subscribe to our channel. Make sure to subscribe to our Telegram channel. Just go to rogerscott.com/Telegram. I give free trades there. How could you not subscribe to that channel? You'd be nuts not to. And pictures of my cats. Most importantly, I've opened up my VIP room for the summer. Yay, no cost. It's free. You get to see all this live with me doing this throughout the market, and you can ask questions. Link above or below this video. It's happening at noon today. Monday through Wednesday at noon, Thursday and Friday, 11 a.m. Noon today, don't miss out. Most importantly, post your comments below this video. I will respond. Today we've got some big things to talk about, including the strongest sector, strongest stock, weakest sector, weakest stock. But before we get into all of that, let's talk about the broad market. So the market's opening up, or, well, it's not opening up. It still has about an hour and a half till it opens up. But you can see here it's very, very, very flat. Why is it flat? Well, you've got a lot to digest today. We've got housing starts. You've got industrial production. You've got FOMC minutes to see what Squirrely Powell was thinking behind the scenes as he was giving us the FOMC last time. So we'll see about that. And petroleum status report. We'll see how energy market reacts to that. So a lot of Fed data. More importantly, and we'll get into this in a bit, I want to show you something. This is the Dow Jones. Look at the levels. It just broke a swing low right here. And don't say I didn't warn you. I warned you about it when we were all the way up here. I said, I don't think we're going to go higher. There's no major catalyst. We're going to go back down. I told you about that in the Russell 2000. I drew these lines right there, literally at the height. And the same thing for QQQ. Notice I was right. We rallied the day before yesterday. And what did we do yesterday? We came right down. It just decelerated. And folks, I hate to say it, but the bond market is at our target. So that's what? 1 right, 2 right, 3 right, 4 right in a row. I'm just messing around. But seriously, the fact that the bond market is not showing any type of a reprieve, and the fact that earnings are just coming out okay, it's not making me feel warm and fuzzy because the economy is starting to turn. It's starting to turn a little negative. Bonds getting revised lower, banks getting revised lower, earnings not as good. There's no major catalyst. That's the problem. And that whole AI revolution that lasted for 3 days is not driving the market anymore. So there's a lot of trouble right here. And if this continues to break, if this breaks the current level, which it may, I don't think it will right now. I think it'll bounce, but at least for a little while, and then come down. But I do think the trajectory is lower, and I think bonds are going to go to the 90 level and then stick around there. But I hate to say I told you so, but I did. I told you about this right here, literally right here. I told you about this right here, and I told you about the QQQ. And even yesterday, I said that if this rally that we saw happen right here, it would be a lot more meaningful than happening down here because we've already seen a lot of weakness. And if you look at technology, which I told you loud and clear about, we're almost right at that level. Same thing with XL SMH. Not doing all that well. More downside. Hopefully this pivot right here could be a pivot, but I don't think so. I think we're going to come right back down, and I think we're going to go lower because all of this AI hype that was really driving the market, I would say the first quarter and a half is just not there no more. Now, let's talk a little bit about the economy and what we can expect, and I'll circle back into weakest, strongest sector, and I'll give you the biggest day trading stocks too. Market participants are looking ahead to the release of the Federal Reserve's July policy meeting. Blue chip Dow and the S&P, yes, the Dow and the S&P dropped to a 1-month low. That's not a good sign, folks. That's not a good sign at all, okay? Banks sucked yesterday. Home builders, not real estate stocks, and we're going to have real estate news today. Home builders did really well. Warren Buffett is going in. I like Lennar, I like DHI, but my favorite actually is Pulte. But I got to say, their correlation to Pulte is about 99%, so not a major factor there. Today, or yesterday, we had retail sales. They came out stronger than expected, and core came out stronger than expected. What does stronger than expected data do? It gives the Fed more green light to raise rates. So it's one of those scenarios. Remember, we're in an inflationary market cycle. So it's bad news, could be good news, good news, could be bad. We're all over the place. Now, here's some concrete evidence, data. Neil Kashkari said at a conference on Tuesday that even though inflation has been receding, it's still too high. It's sticky. He didn't say it's sticky. I'm saying it's sticky. I want to see convincing evidence that inflation is well on its way to back down to 2%, and then we can allow it some time to run. I agree with him 300%. Now, hopefully, Powell is on the same wavelength. We now have a 90% chance that the Fed will not take action. That's pretty baked into the market. And unlike previous periods, it's not going back and forth. You've got earnings today. Cisco, TJ Maxx, Target. Target's already up quite a bit. The numbers are good, but the stock market's not. Synopsys is coming out. This week is really the last hooray for earnings. After that, it's over. You got building permits today. You've got housing starts, really important for those real estate builders, those home builders like Lenner and Pulte. You've got industrial production. You've got crude oil inventories. I like energy right now. Europe, they're digesting what's happening here in the U.S., and they're waiting to see what the U.S. Federal Reserve's trajectory is. Insurance and retail led the market in Europe. In China, they're not doing good with their real estate market. Data showed on Wednesday that Chinese home sale prices in 70 cities, excluding state-subsidized housing, dropped for a second month in July, underscoring the worsening property downturn that's exerting pressure on the world's second-largest economy. That's bad. That's terrible. Japan closed sharply lower, ending at a more than a 2-month low, as more signs of deteriorating conditions in China and renewed concerns about a hawkish U.S. Federal Reserve stance waits on risk appetite. It's not a new hawkish. It's not a renewed concern. It's never changed. The Fed's always been hawkish. They've just been hiding it really well. The reason the Fed is not doing anything today, or didn't do anything, and they're not going to do anything last time, is because they're just sitting in wait. Don't take inaction with the fact that they want to lower rates. Inaction just simply means they want to wait. They did so much aggressive hiking in such a short time. They need to wait and see what happens. DLO is one of the stocks we're going to be talking about today, actually in a few minutes. And look at the earnings. You got Cisco, TJ Maxx, Synopsys and Target, Wolfspeed, Stone Company, Zim Integrated Shipping, but the focus is still on retail and servers and tech. So watch those sectors today. Now, where is market flow going? Let's look at this week. This week, healthcare, energy, Dow, even though the Dow is making a 1-month low, it's coming into blue chips. Notice communication is now below the Dow, below S&P 500. I warned you about that too, but so is industrial. So is real estate. So is consumer staples. So is utilities. So the market is really odd right now. Over a 3-week basis, you got energy, communication services, healthcare, the Dow. Honestly, I'm still seeing strength coming into the healthcare and energy sector. And cumulatively, energy and healthcare, and then communication, and then the Dow. So I would be really, really cautious right now, and I would be putting money in energy and healthcare, and I would be taking money out of consumer discretionary and technology. Right here, maybe even utilities. Now let's look at our stocks so we can make some heads or tails and go through some stocks that are making moves. I want to give you, so the strongest sector is energies. The weakest sector, honestly, is either utilities or technology. QQQ, if you want to be broad, the strength is in the Dow and the weakness is in the QQQ, if you want me to be really broad with you. So let's talk a little bit about strength. Where are we seeing strength? Well, communication, chips, communication, Carnival's not doing so well. Looks like the rally in cruise ships has healthcare. Look at healthcare. So look at Royal Caribbean not doing well. I'd like to see another pickup in strength, but we're not seeing it. Let me tell you what I think right now. I love Pulte Homes. I love this stock right now. If I had to pick my favorite stock this minute, it would be Pulte Homes, and then it would be ETN. ETN, right now, I like ETN. And I like Pulte Homes. Notice they're not tech stocks. One is industrial, basic materials. I think, let me see, ETN. I don't want to make an ass out of myself, which I do all the time around here, but that's okay. Yeah, industrial, blue chip, Dow. So ETN I really, really like. I really like Pulte. Pulte's a home builder. What I don't like is, let me show you what I don't like. What I don't like is I don't like advanced auto parts, consumer discretionary. What I don't like, most of what I don't like is already down. But here, DXC Technology, I think this is going to come down another 2 points. I know most of you are looking for long trades, but Dollar General doesn't look all that great right now. Advanced Auto Parts does not look all that great right now. Looks like it's going to go down a few points. And as I mentioned, this DXC doesn't look. Most are already in the crapper, so they're pretty oversold. But DXC, AAP, and as I mentioned, DG, those still have some potential, some downside potential. Now, day trading stocks. I know a lot of you guys like day trading stocks. And if you're enjoying this, let me know you want me to put more of them in there. Otherwise, I'll stop posting them. DLO. The stock is up only 30% this morning. Let me go through the chart. Now, this is a 6-month chart. Look at this stock. It already had a couple of run days, and it's already up at $20 right now. It's already up here. Now, I personally think the stock is going to peter out, so keep an eye on the, here, let me go to extended hours. There we go. The stock is up here. I would wait and see if it breaks out the high or the low at the opening. I honestly think it's way, way overdone. I would wait for it to start filling this gap and get it when it starts going into the $19, $18 area. That's what I would do here because I think it's way, 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 way overdone. I do like how volume is moving up, but it's just way overdone. The next one is COHR, and this stock is down 25%. This stock actually I think will rally. I want to see it rally above the $38 level. If it rallies above the $38 level, it's probably a good buy. Now, before I let you go, folks, I'm doing something really cool today. At 1 p.m. today Eastern Time, right after my free VIP room, which the link is below or above this video, and the Telegram channel, which you promised to join, I know you will, I'm going to go live. Yes, I'm going live. And boy, oh boy, do I have something special for everyone who's going to be there. There's a stock that goes up almost 12% on average during the 3rd week of August. And this has been happening like clockwork for nearly 3 decades. Not 1 year, not 5 years, not 10 years, not 20 years, 30 years. 3 decades. Can you imagine that? That's amazing. So I'm going in with a rare all-in buy alert on this stock. And here's the best part. I'm giving away all of it for free for everyone who's going to be there today at 1 p.m. right after my VIP room at noon for free, with option data for exactly how I'm going to play it or how I'd be willing to play it. I'm also going to show everyone how to use my new patent pending software that showed 17 hedge funds loading up on this stock, even let you take it for a test drive. Oh my goodness gracious. All you've got to do is join me at 1 p.m. today Eastern Time. That's Eastern Time, right after lunch. Click on the link below, save your seat, and I'll see you there. Don't miss out. Again, subscribe to my Telegram channel. Like our YouTube channel. I post those videos there in the morning, and we're going to change the name to Pub from Wealth Press to Trading Pub soon, I'm pretty sure. And most importantly, post comments below this video. I'll respond to you. Bye, guys. Have a great hump day.